On the next episode of Guiding Grace Bookkeeping, 3 financial statements for financial clarity in bookkeeping. If you don't have accounting background or bookkeeping knowledge, don't worry. We're going to break it down into simple terms so that you're able to understand what 3 financial reports that your bookkeeper may be giving you so that you can make the best decisions for your business. Imagine your business as a whole. Assets equal liabilities plus equity. Hey there, family. Gabrielle here, daughter of the Almighty, mom to 2 amazing kids, and a Yorkie named Luna. Also, I'm a fellow Christian business owner. If you're ready to say yes to financial clarity and exchange chaos for calm, you're in the right place. We're diving deep into strong faith, practical stewardship, and savvy bookkeeping. All right, family, grab your coffee and your notebook. Let's talk about God, business, and getting those books in order. Welcome to another episode of Guiding Grace Bookkeeping. Today we're diving into the 3 financial statements for financial clarity in bookkeeping. Okay, so don't worry, don't fret. If you don't have accounting background or bookkeeping knowledge, don't worry. We're going to break it down into simple terms so that you're able to understand what 3 financial reports that your accountant or bookkeeper may be giving you so that you can make the best decisions for your business. All right. So the first one that we are going to tackle is the balance sheet. It is called the snapshot, or I like to call it as a snapshot. So if you want to know what your business owns and what it owes at a single moment in time, you look at the balance sheet. Right? Because it's a picture taken at a specific date. Let's say December 31st. That's another reason why I call it the snapshot, because it's at any given specific point in time, what's owed and what you owe. Okay. So the balance sheet operates on the fundamental concept of balance. It reflects the core of the accounting equation. We're going to don't be worried here. So it's assets equal liabilities plus equity. Okay, don't fret. Grab a notebook, pen and paper. I'll wait. All right, it's not going to be complicated. I know equation probably have the alarm bells going off like, what? Don't worry. Okay, so let's go ahead and break down that accounting equation down. Assets is what your business owns. This includes cash in the bank, equipment, and money that customers owe you, also known as account receivables. Okay, so it's what your business owns. Liability is what your business owes to others. This includes loans, credit card debt, and money you owe to suppliers, your account payable. All right, so assets is what you own, liabilities is what your business owes, and equity, ooh, a lot of business owners' favorite part. Equity, this is the owner's stake. It is the difference between what you own and what you owe. Think of it as your net worth of the business. All right, so that is your assets, your liabilities, equity. Assets is what your business owns. Liabilities is what your business owes to others, loans, credit card debt. And equity is your stake. So it's what's left over between what you own and what you owe. And that's your network in the business as the owner. All right. So imagine your business is a home. Your assets are the house, the furniture, and the money you saved for repairs, emergency fund. Your liabilities are the mortgage and any bills you haven't paid yet. Light bill, I'm looking at you. It's about that time, guys. And your equity is the portion of the house you actually own free and clear. So say if you bought your house for $100K, what time am I living in? You bought your house for $100K and now your house is worth $150K. Well, guess what? You just have $50K in equity. So that is how I want you to look at your business with the accounting equation. Why does it matter for stewardship? We talk about stewardship here on the Guiding Grace podcast. The balance sheet shows you if your foundation is stable. Are your debts manageable? Is your equity growing? It's a measure of accumulated wealth and stability. So having a snapshot of how the background of how your business is going, it really does help you make informed financial decisions forward for your business, how you are managing your resources, storing it. The next one is the income statement. Maybe like the movie of profit, we can call it that, okay? So the income statement is also known as profit and loss. You might hear it be abbreviated as P&L statement. So if the balance sheet is a snapshot, the income statement is the movie of profit. Stay with me here, guys. Like, you guys know I like my little analogies and examples. I'm going somewhere. Let me cook. It measures your company's performance over a period of time, like a month, a quarter, or a year. It's how you determine profitability. All right. So the core equation for this one is pretty simple. So it's revenue minus expenses equal net income, profit or loss. So how many sales you've made, right? How many income and how much your business expenses is, like how much it costs us to run your business. And what's left over is your net profit or loss. The profit is that you came out on top, and the loss is that you're in the red, that you actually had more expenses than you did revenue, and vice versa. All right. So again, revenue is the money you earned from selling your products, your services during that period of time. Expenses is the cost of doing business, rent, salaries, software subscription, office supplies, all the money that went out to keep your business going, right? And the net income, again, this is the bottom line, your profit or loss. It tells you if you made money or lost money during that movie's runtime. So if your business is a movie, the revenue is the ticket sales. The expenses are the cost of making the film, actors, production, lighting, whew, lighting. And the net income is the box office profit. Why does this matter for stewardship? So the income statement helps us practice wisdom and discipline. Is our revenue truly covering our costs? Are we spending money in alignment with our mission? So it definitely guides budgeting and pricing decisions. Because if you're spending more money out than you're making in, you might need to go to God, have a business meeting with God, and say, Lord, the math not mathing. We at a loss here. Which direction do we need to go? Because that'll give you more informed if there's some things that you need to cut back, or maybe there's time for a pricing change because of inflation. The profit and loss P&L income statement will let you see that. The last one, okay, that I want to go over is called the cash flow statement. Think of it as a pulse. All right. If the balance sheet is the snapshot of wealth and the income statement is the movie of profit, the cash flow statement is the pulse of your business. It tracks all the actual cash that came in and went out during a period, categorized into three main activities: operating cash, investing, and financing. Okay, so hear me out. Stay with me, because you're like, if the income statement does that, why do I need a cash flow statement? Because it tracks actual cash in and out. All right. So that also leads into something else on there's different type of bookkeeping: cash based and accrual. So right now we're going to kind of touch a little bit on accrual. Okay. So you might record a sale revenue when you send an invoice, but the customer may not pay it for another 30 days. Right? You bill monthly, 30-day out at the time. Accrual accounting accounts for the money the minute you make the invoice. All right. So the income statement would say, hey, we made some dollar bills, y'all. Okay. The cash flow statement tells you if you actually have enough cash right now in your bank account, in your business to pay your rent and your payroll. So the income statement says you made a profit because as soon as you made an invoice for your customer, it's counting that income, but you haven't actually received that income until 30 days later. But the cash flow statement will actually tell you, like, I know you recorded this on the income and that's money that's going to be coming, but this is what you have right now. Can you pay your rent right now? Can you pay your business expenses right now? Okay. So say if you got a big check yesterday, net income is high, but you realize that money is sitting in a deferred investment account. Cash flow is low. So you are profitable, but you can't pay your groceries today. All right. So you have the money, but you don't have the money. The cash flow statement will tell you what you have right now. Right? So the cash flow statement is crucial for managing your immediate responsibilities. It ensures a flow. See what I did there? Pun intended, pun intended. It ensures that you have enough cash on hand to meet your obligation. It helps you avoid the scary situation of being profitable on paper but running out of money. It helps you avoid oh shoot, I'm banking today, but then you really not having any money. So that gives you the full holistic picture. All right. So to store our businesses well, you need to look at all three of them. They are heavily related and they create a holistic picture. The income statement, P&L, profit and loss, determines your net income, which directly flows into and increases the equity section of your balance sheet. They are linked. They hold hands. They're family. Your cash flow statement tracks the movement of cash, which impacts the cash account, a key asset on your balance sheet. Remember, the asset is what your business owns. And last point I'm going to make is how you finance your business. Loans versus owner investment shows up in the liabilities and equity sections of the balance sheet and also in the financing section of the cash flow statement. So if you have loans, any investments that you're doing in your business, that shows up on the balance sheet and the cash flow statements. You see how they kind of hold hands? All three of them is so important for you as the business owner to make informed decisions. See if you have equity, see how much your business owns, see how much you owe, see what you actually have cash in your account, if your business can stand on its own 2 feet. So you see, if you only look at your balance sheet, you miss the story of how you got there. If you only look at your profit and loss, you might be fooled into thinking you're rich when all your money tied into uncollected invoices, right? So stewardship isn't about looking at one number and giving thanks. It's about diligently examining the whole picture God has given us, the snapshot, the movie, and the pulse. Right? So we can make wise, well-informed decisions for health and longevity of our resources that He has entrusted to us. We need clarity to practice wisdom. Family, those 3 financial statements, again, is the balance sheet, the income statement, and the cash flow statement. So I encourage you this week to ask your bookkeeper or accountant. You may have one or the other, or if you don't have any, I encourage you to look at all 3 copies of these reports and practice identifying the core components we talked about today. Ooh, how exciting. We're digging into the bookkeeping meat. So that is your homework. Take a look at your 3 financial reports and see if you can see what we discussed today in today's episode. So thank you for joining me today. Remember, God calls us to be faithful stewards over every area of our lives, including our business finances. Clarity leads to confidence, and confidence allows us to focus on our mission. Until next time. As we close out today's episode of Guiding Grace Bookkeeping, I truly pray that something resonated with your heart and brought you closer to financial clarity and peace. If you felt that connection, or if a specific insight sparked something within you, please consider taking a moment to leave us a review and subscribe to wherever you listen to podcasts. Your feedback helps us grow and reach more individuals like you. And if you know someone yearning for more grace and wisdom in their finances, be a blessing and share this episode with them. Remember, walking by faith and managing with grace can transform your entire world. Until next time, stay blessed, keep shining, and let's keep those books looking beautiful.